Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 17th of June. So we've seen really big movement in a lot of the markets this week. We've obviously seen the indices go haywire, and a lot of the key players in the currency space have also had some really good moves. So let's jump into the markets and see if we can identify any trades for today or early into next week. Let's start out here with the Aussie USD, as we always do. Look, a really big rebound, as you can see. We had the massive sell-off at the start of the week, and yeah, it got to the level that, effectively that 68.50 area, which we knew was a key zone anyway. It went through, look, further than we thought. Last week we were talking about it dropping down to around the 70 mark, which it did for us, and hopefully you were able to get involved in that trade because it was a really good trade. And look, it certainly did continue on, and one of the rules I guess I like to apply is not to worry and try and rejoin a trend once it's actually hit your target. It is a common mistake of people, seeing that a target's been hit so quickly and you're really happy, but then it just continues to sell off. Sometimes you're better off just letting that go and then looking for another opportunity, because when you do that, you can often leave opportunities on the table by not keeping a clear mind. Just generally, if you've set a take profit, the reason why this sold off aggressively was because of news that didn't really totally affect the Aussie USD. It was more about worldwide news that you can't really predict. So always best to stick to the technicals that are providing the right take profit, and work with that and be happy with that, and then look for the next opportunity rather than, I guess, crying over spilt milk, if you like, and trying to recoup it. But anyway, we got that. We got the 70-cent mark really easy, obviously kept going. And then, quite often when it does overshoot a particular target, as it did in this instance, it reaches the next zone, but then rebounds off that very quickly. And that can be quite difficult to trade because the rebound is very sharp. And if you're not ready for it, it's difficult to get involved in. So look, where it finds itself now is, it's an interesting place. You can see the 4 hours definitely starting to trend up. Again, it hit the bottom perfectly. 4 hours starting to look fairly strong. We've already got the lightning bolt on the way up. We're sitting at just above the 70-cent mark, which is where we expected it to potentially stop in the first place. So now really what we're doing is identifying the next real level. Now we know this is right where it is now, at around that sort of 70-20 area. It's a bit of a role reversal zone in that, we had support through here and support right through there as well. It busted through there, came back and tested it, and now it's trying to break above it. And that's pretty interesting, and that is important in its own right, because it is a little mini zone, and we're waiting for a close up. For me, a daily close, probably even, actually, this is a 4 hour. I'd probably go a 4 hour close. That would almost be enough. A 4 hour close above the 20 or the 200 moving average here. And that is a close above the 70 area. If we get a 4 hour close or a daily close above the 70 area, I would be convinced again that we're starting to push up to a reasonable level. And the 71.20 to 71.50 markers are the next real zone for it. So it needs to do that though. For me, we need to see that closure up there to confirm that we are going to break this zone, because failing that, we're potentially trading into something that could be a little bit ugly. I would potentially definitely wait for that to happen. So on the flip side though, if we do start to see weakness at this area, we're going to go down to the smaller time frames and see that that's what we're really looking for. So a series of lower highs and lower lows in this area. As you can see, we've hit the key zone, but again, that would need to break down before. So when we look at this, we've got to say a series of lower highs and lower lows below the 70-cent mark now would be what would be making a short. You've got to go to the smaller time frames, of course, is the 1 hour. But at the moment, we're still looking strong. So you've got to look at both ways. If we get a break below the two moving averages, the 20 and the 50 on the 1 hour, then we're going to start getting keen on a potential short back down to the 68.50. What I like now is the zone is being created. And when a short-term zone is created for us, it makes it very easy to trade, because once we've got that break in that direction, the targets are really easy. Okay, so even here, as you can see, when it was coming down, it was so orderly. And I know I say it again, and I say it every single week: pull back to the 20, trade, pull back to the 20, trade in the direction of the trend. Trading can be as simple as that, and the 20 moving average is definitely the key there. But again, that's what I'm saying. If we get below the 20 moving average and it starts to trend down, even on the smaller time frames, you can get to a 15-minute mark. At that point, if you want to scalp, you start to do the same thing. Series of lower highs and lower lows, trade the pullbacks down to the key levels that have basically been established now. So break above the 70-20 area, and we're looking at going long. And a breakdown below the 20 moving average and the 50 moving average on the 1 hour, below the 70 cents, then we can start looking some short opportunities through there. All right. US dollar CAD has definitely did its thing that we talked about last week. We were really happy about going long with it, and long it did go, which was really good. It went a lot further than we expected in such a very short space of time. Again, this was affected by the big movements of this week, of course. But, and this is another one of those things where we've got to be happy for targets that we set and took. We took those targets, and they were certainly good enough. We traded with the pinpointed area of around, I think we were targeting the 126.50 and then 127. It was actually the 127.50 here. I took off the line, but obviously kept going. Again, it broke through that level there. Now it's found itself at the next point of very strong resistance. As you can see, this is the fourth touch now of the 129 sort of 70 to 30 area, close enough to 130. It's one of those ones now we have to trade it with caution, because if it does push up higher and get above 130, a close above 130 would be positive, but I'd be just very, very mindful that it can reverse here, and it might be one of those situations where it could be a false breakout and see it come back down. I would be happier, to be truthful, if it came back down and actually tested the 128.20 area from above and found consolidation here and then reloaded off here. That would make me more confident that the long is going to be sustained. And that would be my preferred trade. So I'll pull back down to the 128.20, change of trend on a smaller time frame, and then we crack up and then try and break that level good and proper. And that's got far more chance of breaking through than what's currently happening at the moment. If it does break through here, I'd be more inclined for it to come back and test it from above, and then look for the same opportunities we'd be looking for here, but from above it. That's just me being a bit conservative, but I think that's what I like to do at these levels, because it makes more sense. The CAD's obviously been really good to us, and we've made a lot of money off the CAD this year if we've been trading all the levels that we've been talking about. But this is one of those ones where if it's going to break down, this is the place it's going to, and you don't want to really be entering risky trades for the sake of it. There are better trades to be had, and that trade is a pullback down to here, or a break above this level and then come back down to the 130. And then, we know we've got a lot better trading situation. If, of course, it weakens here, breaks down and gets past the 128.20 on a daily close below the 128.20 would see it probably falling inside this channel again with moving averages above it. Good chance they will be below the moving averages at that point with another couple of days of movement. And then we're starting to look at a whole new set of, basically numbers here. We've got the 126.20 and the 128.20. That range has also been a very strong range for a long time. We wouldn't be concerned about that either. But definitely the pullback trade and a move up would be my preferred one at the moment. So that's how we look on the CAD. US dollar yen, this is doing all the right things as well. It had the really big move up, of course, and we've seen a bit of weakness. Look, this was starting to tell the story. You can see every candle here. I'll zoom it in a little bit. This is the daily chart. Every candle past this strong bullish move up here has been a fight. Yes, that they are all hanging. I mean, you've got a lot of a market action with very, very little distance between the closes and the opens. So no one really won those wars, but you could argue that the buyers finished on top because they actually stopped the seller momentum. But in the end, the sellers got their way. And that's primarily a consequence of it being at a very strong resistance level. And when I start to see this, it doesn't fill me with confidence that it's going to continue on heavily. And then, of course, when that candle happened, then it was ripe for the 20 moving average. I mean, I know obviously if we were sitting at this candle right here this morning and I was talking about this video, I would be aiming for the 20 moving average. Obviously, I do that all the time. That's what I would be aiming for, and it's already done that now. And it's also, look, there's a role reversal zone here at the 131, and I know that's still 150 or 60 odd pips away. If it does weaken from here and we start to see a few more swings down, that's probably the level I would be looking for to reload. That wouldn't be a bad reload level, but it may go from here. Just be aware that it has touched a 20, which is a reload zone. That'd be a 38.2 fib. I'd be almost certain if we drew the that there, so you can see it's 38.2 fib. So with that being the case, it may well bounce from here, but the 50 fib is also the role reversal zone, and that does mean something. Okay, so that's a really good zone if it does come back down here to look for a potential rebound off. If it fails and continues to push down, we know we've got a clear target up. Again, it's set the preset target, so I'm very happy about that. If it does go up, that's the target we're going for. Aim for the previous high and see where see how that fares. If it breaks down and closes below the 131, and we're going to daily close below there, we start targeting the 128 again. Okay, so that's the level we'd be going for. So trading both ways, but my preferred is to hover around this area and then push up and push those highs again, which is the most likely or not the most likely, probably the most technically sound, I think is probably the best way to say it. All right, let's move over to the dollar index. We saw the weakness, no surprises there, massive MACD divergence on that move. A lot of that was driven by, catalysts that are basically not much to do with the dollar index really, but it happened anyway, and they're the ones that are going to generally see a big sell-off. It came back down to the 20 moving average. No worries there. That's obviously a big reflection on an up move on the euro. We'll go to that one fairly quickly. It is at a support zone now, so you can see we're still in an uptrend. There's no question about that. It did what we needed to do last week, so it certainly gave us a good move up, which shorted the euro, but it did go a fair bit more than we expected it. So, yeah, and then down it came. So on the 20 moving average, look, the euro is the one we really want to talk about here. We had the big move up. You can see that it went straight into the 20. This is the target I actually set for it earlier in the week, but it came back and actually ruined that party. It didn't go on the first go, it went on the second go, which happens sometimes, but it still got there in the end. I guess that's it just got there without me in it, but that's all right. But you can see though that the power was starting to build, but now it is in that precarious zone that we've got to be mindful of, where it touched the 20 moving average, just like the dollar index has touched the moving average from above. And if it's going to sell off, that's the area it's going to sell off from. So it's a very strong resistance zone here. Okay, you can see all of that right through there, and there's a 20 moving average. To go long on this, it needs to break the 20 moving average. Okay, simple as that. If we get a close above 106 on the daily chart, and it needs to be a daily close, I would be starting to get fairly bullish up to the 106.80 to probably 107 level is very easy to get to, this area here. Okay, so that green line, I'll just pop it up a little bit. The 107 is the target that we're going for there. So daily close above the 106. And we can start looking for momentum moves up to the 107. But failing that, if it does look like it's going to keep weakening and we get a series of lower highs and lower lows on a 4-hour or a 1 hour, the target is back down to the 104.80. I'm not so sure about this low. I think we're still in scalping mode. We're absolutely scalping mode at the moment. So I would be targeting the 104.80 in the first instance. That's a likely trade, and that can happen fairly quickly. So pretty good trading on the euro. Hopefully you're able to get involved in some of that. All right, the final one we're going to look at is the S&P 500. I've got that on a weekly chart at the moment because that's how far you have to go out to really see where the support is. It's looking like a absolute bloodbath at the moment. And look, when you go to the smaller time frames, you can see the pennant we set up. So yeah, that obviously worked out quite well. But also the swings that you've got to be mindful of as well are all fairly equal. So, and by that I mean, if we go and measure the drops, you can see that they're all fairly even. You can see the drop there from point to point, nearly even. This one has been a little bit further. Okay, this one's gone a little bit further because everybody pretty much expected it to hold up above 3,700, which you would normally expect. It's just completely sold off, and it took a while too. It's not like it did it as soon as they announced the interest rate rise. I think that was almost predetermined, but it did it not long after. That's okay. Look, sometimes this is going to happen. Other pieces of news can influence it. What we do know though is there is support here through this level here, but we had an unprecedented move up in uncharted territory through this whole period. So and like I've mentioned over a few weeks, a series of weeks, we've been in a downtrend on this for a long time. Basically since we made that first swing way back in at the start of the year. So this is not a surprise that we're down here. Ideally, where it's probably going and where it really wants to go, I think, is we've got to go to a weekly again to see it, is actually this level here, which is the 3,500. I've been saying this for a little while, as you know, and although we've taken away the lines, I mean, it makes a lot of sense to get to the 3,500 for a few reasons. One, it's a pullback that everybody will consider, very, very solid, and probably one that would say, okay, we can bounce off from here and start to rebuild. But also, it's the 200 moving average, which is a very, very big deal, and that is coupled with a very strong roll reversal. This is a weekly chart, remember, so these candles are all weekly additions. You can see we had very strong resistance there the first time it got there, came back, pushed it, tested it a little bit from above again, and then went. Okay, so you would almost think that it's probably going to gravitate to this level if it continues to weaken. So if we see more weakness, every break that we see is a weakening break. So that's the level that we're aiming for, the 3,500. I think that's going to be a pretty strong level for it. But if we do get to the 3,500, that is our target. and then we'll reassess. Then we'll start looking for reversal opportunities, but we're not going to try and catch a falling knife either, right? We're going to wait for the reversals if and when it gets there. Until then, we trade what we see, go down to a 4 hour. Every pullback to a 20 moving average to me is an opportunity to continue this down for that 170 points that we're looking for. So pretty good trading on this one. Failing that, I think it effectively needs, now I need to see a higher high, higher low sequence on a daily. And that's the only thing that's going to make me go long on this, because that's the only thing that's going to break the shorter term downtrend. Simple as that. So if we see a series of higher highs and higher lows on a daily, then we start looking at the long opportunities and getting back into the 4,000s. But until that happens, we're going to look for the shorting opportunities down to the 3,500 and basically let price dictate what we're going to do next. That's, I think, the most important thing. So hopefully you've had a great week's trading. I think we've seen amazing opportunities. Nearly everything we talked about last week played out. So hopefully you're able to get involved in that and get some good results. This week has been no exception on moves. We'll see how we go in today and early next week. But I think some of the moves are already starting to see these big levels. I think we can see that continuation go on, and we should get some good trading next week. Have a great weekend, everyone.